Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Quant and its token QNT, conduct machine learning based price forecast, regression analysis, accumulation strategies, and estimated bull target for Quant. Quant is one of the rallying cryptos over the last 24 hours. You can see has been rallying by about 18% over the last 7 days, about the same amount. Currently, market cap slightly under 1 billion by rank number 84. Again. Per the tokenomics, about 15 million is the max supply, out of which 12 million is in circulation. So little over 85% is in circulation. So going forward, you can see that over the last 1 year or so, the price and the market cap growth are going in hand. That means going forward, any rise in market cap should get reflected in price. Again, none of the content is financial advice. This is use of statistics, machine learning, and data science techniques to forecast. Right now, we are going to forecast Quant based on what historical price action has been looking like for Quant. Again, since 2018, this is an older crypto, has been around for almost two market cycles. Back in 2021, the previous all-time high was at around $364, from which the token dropped about 85% to $49 or $48 at a weekly average level. Has been consolidating since the initial drop of June 2022. Tried to rally towards the end of the bear market of 2022, but since 2023, this particular crypto did not have a favorable recovery year or the halving year rally. You can see the previous previous high, local high was in the year of bear market of 2022, and for that you can again check it out in terms of the move with respect to other cryptocurrency. Using this ROI related metric, again you can see in 2022 most of the crypto had a cumulative ROI of more than negative 20%. So back then in 2022, Tron had about 22% drop, and so on and so forth, till about Solana, which had about a 95% drop. But what you can see that in 2023, those cryptos which had a drop, for example, Solana had a decent 2023. Most of the cryptos had either a close to zero or slightly positive 2023, and also in 2024 there are some cryptos which have had a negative year, but most of them are above this zero threshold. You can see only a handful cryptos such as AVAX, and again over here if we zoom it over here, you'll find that the ones that have negative returns for 2024, Link, AVAX, Dot, and again this should be Matic. So apart from that, most of the cryptos are having a positive. Again, that are the top cryptos are having positive returns in 2024. But if you compare that with Quant, over here, Quant during the 1st January 2024 was valued at around $140. Now it's almost half of that, at around $80. That means 2024 has not been that great for Quant. But in terms of the machine learning based price forecast, what the trend based model is saying, that the prices, this pink line, which is the output of the machine learning model, providing the directionality of the price action, most likely the directionality is up for Quant. The bull case at 1 standard deviation confidence between about 68 percentile confidence between $80 till about $150 between now and April of 2025. Similarly, if there is a crash, the floor between $43 and about $62. If on the other hand, if Quant has a euphoriac rally like it did back in during the end of year 2020 or early 2021, which would be similar to end of year 2024 or early 2025 based on the 4-year market cycle hypothesis, in that environment the 2 standard deviation bull case for Quant is between $89 all the way to about $250, and that $250 would take out the previous local high, and that was established in 2022, but not the all-time high. I think for that even a 3 standard deviation or a 99 percentile 99.7 percentile confidence level rally barely takes out the 3 standard deviation high at this point in time. Again, much recovery to happen for Quant. If it were to happen, the run to its previous all-time high would require not just 1 or 2 standard deviation rally, but about a 3 standard deviation major mania or euphoric rally for Quant. If that scenario were to pan out, again, week by week forecasts are also available on the website. The link is on the bottom of your screen, cryptoweeklies.com. That's our home website, in-house developed website, has features related to machine learning, as well as regression and accumulation strategies for top 100 cryptos by market cap, as well as some of the analytics, such as what are some of the word cloud, as well as sentiment analysis, yearly ROI that you're seeing. And all of the content is available for free. You don't have to sign up or pay for anything. And this tabular format interpretation of the results for Quant highlight that this is the base case, which is the directionality model, the pink line. To its left are the 3 bear cases at various confidence level. That is, for example, for this week, there is 99.7% confidence of the model saying that the prices cannot go below $52, and similarly cannot go higher than $98 with a 99.7% confidence. At 95% confidence, the prices are at not high as again above $89 at 95% confidence, as well as cannot go low as than $58. Similarly, right now we are operating in this 68 percentile confidence, the thresholds where prices do not go below 65% or go higher than $80, slightly higher than $80. That is the current price, but the weekly price most likely would be lower than weekly average price would be most likely lower than $80. You can see for the last 7 days or so, the prices, again, this is market cap view, but if you go to the price view, most of the last week was spent during this $60, between the $60 and $70 range. Even though the prices are right now at around $82, the weekly average would more likely than not be lower than $80. So with this, we covered the machine learning based price forecast for Quant. Now that we have done that, we'll discuss some more about the regression based valuation for Quant. Again, this is the candles for Quant at a weekly level. On top of this OHLC candles, the pink line, which denotes the polynomial regression based valuation, where if the prices are above this pink line, that means Quant is, with respect to its historical data, slightly overvalued, and when they are below, then they are undervalued. Right now the price is slightly above the pink line. The pink line is at around $63. That means Quant either is in a recovery mode or a bullish. The shape of this pink line would have a bullish bias. Again, this is a non-linear model. That means in the bull market, the shape of this line is going up with time. In a bear market, this shape of the line goes down with time. That this particular point in time denotes that the prices are more likely to go down with time. Again, not a surprise, since 2021 Quant has been in a downtrend, but in the bull market, what tends to happen is that prices not only go above the pink line, but this yellow line, which is a 1 standard deviation residual applied on this fair value function. At this point of time, this yellow line is coming in at around $109, and that you can see during some of the bull market rallies, which do not correspond to a euphoric rally or a mania phase in the wider crypto market. The 1 standard deviation, this yellow line, holds a major resistance, acts as a major resistance. Again, if that were to change, that $109 could be taken out again during the euphoria phases of the market cycle. You can say that prices go above this 2 standard deviation residual applied on this fair value based valuation. That 2 standard deviation ceiling is coming in at around $189. And above this $189, that's where you can see that's where the prices are very close to the blow off top phase, where the market does not recover for several years, and that level is at around $190 for Quant. Again, I'll put back all the 3 levels. Again, in terms of the downside risk, is the first is if the prices were to go back down to the $63, and if they did go that level, that low of a level, then the 1 standard deviation floor or the 1 standard deviation residuals applied to the downside do offer some of the major supports. Again, the price has not corrected since about the bear market of 2022, has not gone down below the green line, at least during the entirety of this recovery year and the later half of the bull market. And that green line, which represents the 1 standard deviation residuals, is currently at around $36. That's about Quant in terms of regression based valuation. Now we'll come up with the three models that we have for accumulation: the SMA model, which is simple moving average based model; the DCA model, which is similar to this regression model that we saw at a weekly level. Instead of weekly level, they are applied at a daily level; and the time weighted average price model. Starting with the SMA model, this is price versus 20-week moving average. Based on that, the risk levels are color coded and normalized between 0 and 1. The key idea with this chart being, whenever the risk levels are lower than some percent of risk, that means, let's say for example, whenever the risks are less than 30%, that's when if you're DCing at those points, you are avoiding DCing at a local top or at overvalued phases of the price cycle. Right now the risk levels is at around 32%. That means in the larger scheme of things, there is the token is not in a overvalued phase at this point in time, but that could change soon. And you can use this model to again do the opposite and identify the tops instead of the bottoms. Again, if you are interested in the risk, whenever the risk levels are higher than 50%, you think that that's a great time to dollar cost average in out of the market or sell. You can again use this model as a reference. Again, this is not financial advice. This is how it has been so far during the mania phases or the bullish phases of the market cycle. And last but not the least, you can also use this model to forecast some of the prices or some of the key risk level going into the future. Right now, as the prices are at around $82, they represent about 5% risk. But if you think that let's say at this green color code, that represents about 0.6 risk level, at that point in time today, the risk levels, if they were to go to 0.6, the corresponding price action would be somewhere at around between $240 and $250. Some of the higher end of the valuation, again when the color code goes to this shades of red, that at that point in time per this model, the price action could be somewhere between $330 and $360. So that's the some of the, at this point in time, what could be theoretically a peaking scenario for Quant. We can estimate that using the risk model, as well as this is the second model that we have. Instead of using simple moving average as a reference, this uses this polynomial regression value, fair value that we had visited at a weekly level, that pink line. And based on this pink line or the regression value, these color codes are assigned between low risk and high risk and normalized between 0 and 1 risk. Again, the same idea with this model, wherever the risk levels are lower than, let's say 30%, again over here DCing at that point in time represents a decent buy opportunity, assuming that there is a blow off top sometime in the future, and prices are at a lower risk level than the eventual peak. For this model right now, the risk levels are at around 25%, and this is a very conservative model to estimate what could be a peaking scenario where the top is kind of near in the future. Per this model, again price action above $103 at this point in time, between $103 and $157 represents a moderate risk, and higher end of the risk levels based price valuation is between $166 and $194. Again, we have a composite model which takes into consideration of valuation of based on all of our models, and we have that estimated bull run target coming up shortly in the video. But before we do that, we will just briefly look at the time weighted average price for Quant. Again, this blue line represents a time weighted average price for Quant, which takes into consideration how much time has been spent at some of the key price levels, and based on this relationship between this pink with this blue line and the price action, the risk levels are again normalized between 0 and 1. And the key idea is, whenever the prices are below this blue line, that those times represent across several market cycles, they represent some of the very decent times to DCA. Right now we were in that phase for, let's say, since July of 2024 till about most of the time between July of 2024 till about 2 days ago, that is in November middle of November of 2024. Right now we are slightly higher risk than that, again about 20% risk. Risk levels, we spent decent amount of time in August and October close to zero risk. Again, this also helps identify what are the peaking scenario based on how far the price action is deviated away from this time weighted average price. Right now we are closer to the bottom than closer to the top per this model. Again, now we have coming up the estimated bull target, which is a composite of all of the models, and we are doing this for Quant. We have this model available, composite risk score based valuation available for not just Quant but most of the top 100 cryptos by market cap on our website. Right now price at around $81, representing about 25% risk on the DCA model, 21% on the time weighted average model, and SMA model at 30%. Weighted risk is at around 25%, and estimated bull run target based on the expected value based on risk reward ratio is coming in at around $304. That is an expected bull run peak per this per the combination or aggregation of several models, and that $304 Quant represents about a 3.76x, almost a 4x from the current price of about $80. And with this I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.